Hello everybody, my name is Miracle and I'm 20 years old. So over the last year or about year and a half, I've been trying to teach myself and kind of improve my knowledge and understanding of finances and financial literacy with the ultimate goal of financial freedom. And one of my favorite YouTubers, his name is Andrei Jikh, he uploaded a video talking about this quiz. The quiz is by a company called Grow Acorns, which teaches you about like investing, finances, saving and all of that. I will leave a link to the website and the tests in the description box below. The first question says, which of the following factors does not affect your credit score? Number 1 is payment history, number 2 is credit card balances, and number 3 is income and assets. I'm 100% sure that this one is income and assets, and yeah. So it says your credit score is informed by whether you pay your bills on time and manage your balances well, not about how much money you have. The 3 biggest factors that make up your score are your payment history, your credit utilization, and the length of your credit history. Question 2. Say you have $100 in your savings account earning 1% interest per year. After 5 years, how much money do you have in your account? I know this uses the principle of compound interest, whereby your interest is calculated by your new balance every year. It's going to be more than 105 by a couple cents. Third question is, pre-tax contributions into retirement accounts may reduce your current taxes. I know that if you invest some money into a retirement account, such as a 401k, you don't have to pay taxes on that amount, and so it reduces your taxable income that you have in the present moment. So any contributions you make into a qualified retirement account, such as a 401k, are pre-tax or tax deductible, meaning they lower your taxable income by the amount of your contribution. You pay less in taxes now, but will be taxed on distributions when you withdraw the funds in your retirement. Question 4 is, say you have a child in a private elementary school. True or false? Their tuition is tax deductible. Private elementary and high school education expenses are not tax deductible, but you can use funds from tax advantage investment accounts, such as a 529 plan. Question 5. Let's imagine you have $1,000 credit card balance and the interest rate you're charged is 15% per year, compounded annually. If you don't pay this credit card balance at all, do you know how many years it would take for your balance to double to $2,000? I'm not quite good with math, so I'm just going to say 5 to 7. So that is incorrect. The answer is 3 to 5 years. This is an example of how compound interest can work against you. Just like you earn interest on the total amount when you're investing, you're also charged interest on the total balance of your account when you have debt. In this case, you use the rule of 72. I've never heard of that, I don't know what that is, to determine when your balance will double. You divide 72 by the interest rate, 15% in this example, to get 4.8 years. Question is, a 15-year mortgage usually has higher monthly payments than a 30-year mortgage, but the total interest paid over the life of a mortgage will be lower. With a shorter term mortgage, like a 15-year mortgage, the payment is obviously going to be higher, but your interest will be lower because you're paying it off in a shorter amount of time. Question 7. Investing in a company's stock is usually safer than a stock mutual fund or an exchange traded fund ETF. Trading with individual company stock is more dangerous, but when you trade with stock mutual funds or exchange traded funds, I know you're more likely to gain profits because it's a bunch of stocks together, so you're more likely to gain like little bits of profits from different companies to grow your money. When you invest in a mutual fund or ETF, you're buying a basket of investments, so that spreads out your risk, meaning your investment isn't dependent on the fortunes of a single company. And even though individual stock prices may fluctuate wildly, broader indexes have always gone up over time. So the final question is, with insurance policies, if you never file an insurance claim, you get your money back. So is it true or is it false? I know that is false, because I know if you have an insurance policy, if you use it, obviously they give you some money, but if you never use the insurance policy, they will never give you your money back and they just take your money with them rather. So that's the end of the quiz. I got 7 out of 8 correct, which is really good because it just shows you that improving your financial literacy is just a matter of taking matters into your own hands and sort of searching online. You do not have to pay for any courses. There's so many YouTube videos out there that teaches you about financial literacy, taxes, credit card, debit card. It's just about building your knowledge from the ground up. If you have any questions questions, leave them in a comment down below or message me on Instagram. I'll be more than happy to answer your questions or even provide you with some resources. I'm going to leave my favorite YouTube channels for learning about my financial literacy, the ones I found most useful, and websites I found most useful for improving my financial literacy. And so thank you so much for watching today's video, and I'll see you in my next one. Goodbye.